Hi, good evening. Today is Friday, September 24th. We had quite an interesting week this week. The markets had a very strong sell-off on Monday, pretty much a waterfall until the last half an hour of the day. And the sell-off was basically based on Evergrande fears of China, big real estate developer, not paying on its bonds obligations that we talked about a couple of weeks back, and it's finally made its way into the MSM media, scared the people to have this sharp sell-off. But then, of course, they have changed the headlines the next day saying that, well, it's not technically a bankruptcy, even though in all reality, they're pretty much bankrupt. They said, well, it's not bankruptcy. They will repay local creditors, but not necessarily repay their offshore US dollar creditors. So China is trying to manage that default to benefit China, of course, which makes sense, at the expense of the foreign creditors. And looking at the long-term situation in China, this is definitely a major risk to the whole China real estate market and consequently the whole economy. How they manage this successfully or not, it's really impossible to tell, I think, at this point. They will try, I think, to manage it so that the real estate prices do not fall that much in China in nominal terms, because it's a very large percentage of all Chinese net worth is their real estate holdings. So China doesn't want to upset its population, obviously. So they will try to somehow stabilize this situation, and how it plays out will be very important for the market going forward in the next few months or so. But meanwhile, the headlines, like I said, have changed and the market rebound. And it was an amazing week of deception where we have this huge sell-off on Monday and only to close actually up for the week. We managed to break two round numbers on futures, 4,400 and 4,300 on S&P futures. We traded as low as 42.9375 and then had an 150-point reversal, like I said, to close up for the week. It was quite a roller coaster. And right now, the Soja level, 44.50, is kind of keeping a lid on pricing, with the vol trigger level being way down there at 43.95. So to me, the pricing today, the close seemed very strong, and I wouldn't be surprised if next week we break the Soja level and test 4,500. And then I would be looking at the price action there to see how it continues between 4,500 and possibly even testing the new all-time highs. Then we will know more whether we break the new all-time highs and continue or fail at that level. But for now, I think for the next week, it's a bullish situation. Mm-hmm. And if we look at the chart of Nasdaq, it's kind of very similar situation to S&P 500. Maybe Nasdaq slightly underperformed the small caps especially, but we did test that 15,000 level and rebounded off that level, never closed below this important 15,000 level. We talked about it. And so Nasdaq also on the futures closed slightly up for the week. We mentioned that the leaders had suffered a lot this week, Apple, Facebook. Facebook especially was in the news and had a really bad week because apparently the news of the lawsuit, which has been filed weeks and weeks ago, finally again made it into MSM, and Facebook had a really bad week with all of that potential damages that they're being sued for. I think I also mentioned Tesla last...
Yeah, really nice move today.
Right. I was expecting a breakout last week, which came late in the week. And given how Tesla has the potential to do the gamma squeeze and move up higher, and it closed very strong for the week, I wouldn't be surprised that we have this huge move next week to 800, maybe even 850, because you never know with Tesla, when it runs, it really runs.
Well, that's so that's getting back in the range of its high back in February, right? Where I think a lot of bulls were trapped by that collapse and have kind of been nursing their losses since then, right? And
even there were lots of news that ARKK is selling lots of Tesla, etc. So the news have been really negative for Tesla. So wouldn't be surprised. I wouldn't be surprised to have this super.
But here we are at this secondary high. We closed right a little bit above that level, at least the closing stick, right? Opening stick here. We closed a little bit above that level. We haven't technically broken out yet, but I mean, it's really close to breakout above that previous secondary high after the primary high back in February, right? So it'd be interesting if we break out here on this one. And you look at, ARK has really kind of just been chopping around and not doing so well. And I think that some of this has to do, a lot of this has to do with big investments in things like Coinbase and so on, Alibaba, some of these that have really been underperforming. And so I think that's part of the explanation. I don't think it's, it's like really risky to, these funds that are shorting this. I think it's, they're playing with fire because some of these things are going to bounce really sharply when they bounce, and they're not good. Some of the underlying stocks in this ETF are not good shorts. I don't think they're not what I consider terminal shorts, where you're just writing it to zero or whatever. It's playing with fire.
Yep. Well, let's talk about the Fed. We had Fed meeting this week, and they talked a lot about inflation in the meeting. Apparently, a record number of members still see inflation risk to the upside, and they said that the inflation for 2021 is higher than they anticipated, which again is interesting, highlights that who can we trust if not our highest priests, experts, who were wrong yet again. This whole year seems to be a failure of experts, but Powell said, interestingly enough, for inflation, we appear to have achieved more than significant progress. It's interesting choice of words. For him, the higher the inflation, the more progress it is. I don't know how it makes any sense, but here we are. Meanwhile, just a few anecdotal evidence that inflation is not abating anytime soon. Apparently, Costco chief financial officer said that their freight costs are becoming permanent inflationary items, and they could continue driving up pressure. And they also mentioned that not only freight costs, but also higher labor costs, rising demand for transportation, products, shortages of computer chips, oil, chemicals, high labor costs. So Costco expects the inflation to run between 3.5% and 4.5% for Costco, which is pretty much double the Fed's target. So I would say to Jerome, definitely significant progress has achieved, and he seems to be more significant with the day. But
well, the thing about the Fed is they're constantly having to engage in deception,
right,
in order to jawbone the market into the position that they want. They're clearly engaging in inflationary policy in order to, or they might say reflationary policy, that they thought that last year there was this great risk of a deflationary spiral, right? And that they needed to reflate things, and that was less bad than the alternative of not doing anything. I'm not justifying it. I'm just saying that's what they would say. But they're at the same time they're having to pretend that they actually care about inflation, but they don't. It's a very much a secondary priority to them. they have a set of political, they are a political organ, and they pretend like they're like Supreme Court, like we're above politics or something like that, but they're not. They're very political. They know that if they went too much against the way the wind's blowing, then the people, there would be a lot of politicians that would seize on that, and all right, let's get rid of the Fed or audit the Fed or change its role. And they don't want to limit their power, so they defend their power by lying, just like any other politician does. And it's just a stream of lies, and they have to do that in order to keep their power.
Well, and also I think that the whole inflationary, one of the bigger issues besides the shipping costs, like FedEx is another one that mentioned that they will raise shipping rates by 6% for domestic and 8% for international. Again, triple, quadruple Fed inflation. But the biggest cost of inflation that I think hasn't even been factored in fully yet, not even close to be fully, it's the labor costs. The labor costs are skyrocketing across the board. And even from anecdotal evidence, the security guards that we are hiring where I live, about to get a 10% raise in the next contract. That's just one thing. Another one, the house of a person that I know was just sold in 3 days with 12 offers and a bidding war with way higher prices than they anticipated. And so everywhere you go, it's labor shortages, and there's an inevitability that they will have to keep raising the prices, and people jump from one to another, signing bonuses. So all of this hasn't even fully moved into the price of costs on inflation.
Well, and often economists, I think that both not Powell, but Yellen, well, not Yellen or Powell, but like Bernanke and Greenspan would paint rising labor costs as bad inflation. But if energy prices and everything else are going up, but labor prices are stable, then that's okay. Inflation is just monetary, or it's just momentary, transitory inflation. But labor people that are working, demanding more to make up for costs or whatever increasing, that's bad inflation, because they don't manage. So it's like that's what I'm talking about, the kind of lies that they engage in, that they have a clear set of policy preferences that they don't reveal, and the way they talk about it, they kind of reveal the edges of what they really want, which is pretty much that companies can hire people cheap is what they want, and they don't like rising labor costs. Well, it does create inflation. I mean, there's no question about that. But their policy preferences have resulted in a lot of things that I'm not sure are good for the economy long term. Kind of hollows out the economy, creates an underclass in the country.
Right, and because for every new dollar in debt that is taken, of course, it increases GDP, but each incremental increase becomes so much smaller for every dollar of debt. And so eventually you get to a point where you get no benefit, and then you will eventually have the decline and the deflationary spiral, or at least economic decline.
Well, they have, and that's what John Maynard Keynes called pushing on a string, right? That they will get to a point where they've provided so much easing that if we actually had a real recession that wasn't just tied to COVID or some momentary thing, it was just a garden variety recession. Well, what would they do? What tools do they have? Are they going to do double QE5 or what? I mean, they don't have any bullets left in their gun, and they're counting on everything staying fine for the foreseeable future, and that's it seems like that's not what kind of competent leadership does. They anticipate that things might not always be good. And people that are maybe less economically sophisticated, maybe they're the ones that are assuming everything's always going to stay exactly as it is right now. But they're supposed to be more sophisticated in their thinking about economics. Why are they not using that sophistication? It's like, I mean, if you're an experienced trader and you have 5 up days in the market, you don't think, oh, it's never going to go down again. I mean, it's just going to keep going up. Well, that's kind of the thinking that they have, in that, look, real estate always goes up, right? And stocks always go up. They don't go down over time. I mean, they won't go down.
Right. Well, they finally did announce that tapering is right around the corner. The corner is getting closer and closer. Well, Powell said that the tapering is going to end around mid-year of 2020. And so the market, or at least the most of the participants, interpreted it that they're going to start taper in December with 15 billion per month, and they will end it in July. But of course, Powell is saying the tapering is not tightening, and they're not planning to raise interest rates much, but maybe sometime one rate hike next year.
But that's kind of like telling the Taliban, we're going to pull out by, by September 11th of 2021, and that's it. I mean, don't act on that knowledge, but we're going to pull out by this date. So, it's kind of the same thing. I mean, if you're like giving that far a warning, like where's the shock and awe for the economy? I mean, the economy will incorporate that, or the market and the economy will incorporate that, and it won't have much of an effect, I would say. Yeah.
Well, I mean, I think they're afraid of taper tantrums, so they're trying to telegraph their intentions as far in advance as possible, because the economy has become so closely tied to the market that any significant sell-off in the economy actually would cause a recession. So it's become in reverse. When the recession was causing sell-offs before, maybe, I don't know, but right now, for sure, the sell-off in the market, anything significant longer than we had for 3 days or whatever, will definitely cause a huge economic downturn. So they're trying to manage the stock market, and by doing that, manage the economy, I think.
Oh, I agree, but it's like it's going to blow up. I mean, because the stock market can't just keep going up at the rate that it has been. It's been a great rally. I love it, but at the same time, it can't continue at this rate. It just won't. And there will be a pullback. That will be a good opportunity. But
because like we were discussing before, that the rise in the market right now is basically not based on any innovation anymore. It's basically based on expectations of more sales and no innovation. And meanwhile, lawsuits with Apple, lawsuits with Facebook, with Apple, no innovation. Nothing really new has been invented in a pretty much long time in the technology sector, at least.
Well, I think what's interesting, I think in August, I think there was sort of this brief scare about the economy slowing down. And as a result, here in July, or actually it started in June, we had a really big pullback in energy stocks. And I mean, that's just one example, which is Diamondback, it's kind of a canary in the coal mine, because it's a marginal producer of fracking and so on. And so they're a marginal producer, they're a higher cost producer, but if oil prices are high, then they do well, right? Same with like an EOG. I mean, it's a very similar chart. But I mean, if you just look at crude itself, then wherever that is, then it's sort of following the crude chart a bit. But here we had this big pullback until early September, and it bounced really nicely from 61 or so up to now 73. and we could. I mean, I think
Yeah.
that it's going to rally right along with the stock market is what it looks like it's doing. So it's been moving in tandem with it. So I think that's. I mean, this is a big driver of inflation expectations, and one of the biggest.
Right.
But then things like copper, even, I mean, it's off its high back in whatever that was, May, but it's I think we could see some pretty sharp rallies in some of these. Maybe not so much. I mean, like silver has really been suffering, and gold they haven't been doing that well. Platinum and palladium rallied nicely this last week, but there are a lot of commodities. It's just a little bit more of a selective market than what we saw earlier this year, like corn, still way off its highs.
Well, I think there could be a difference in commodities between the food, so to speak, commodities and the industrials, especially because of the Evergrande and slowdown of Chinese builders that may affect like steel prices, for example, X and like you said, copper and.
Right. I think we've seen though, like lumber. It's interesting to see this kind of rounding bottom. I'm not saying it was a bottom, ultimate bottom, but this kind of saucer formation is kind of interesting to see because it's been such a relentless move down from its peak, which was a little bit of a mania back in May, but it seems to have maybe found a little bit of support where it is right now. Copper, copper never really dropped severely, but it's just been kind of churning since May as well. But I think it's interesting to see some of these because like the softs. I mean, even though they're technically food, they're even more bullish looking than like copper and some of the industrial commodities.
Right.
So it's interesting to see some of these charts where things are. I mean, I could see coffee like making an attempt at breaking out here, and that's something that people will feel in their daily lives, right? But I clearly like the China story. I mean, something like Alibaba just collapsed, and it's very interesting to see. It's not necessarily tied to Evergrande.
Well, no, I think it's in China story is actually very interesting beyond Evergrande because it seems that the leadership is trying to redistribute the wealth, so to speak, and consolidate power. They don't want to have any powerful billionaires in the country, and to threatening the Communist Party in any kind of form or shape. And so they are trying to make sure that the working people keep their money, and even with Evergrande, they want the developers to keep building and not necessarily repay on their bond obligations. They want them to deliver the housing for the people who have paid down the down payment and instead of the obligations that they have. So Chinese is clearly realigning the economy to be more socialistic, to slowly deflate that bubble and yet not trigger the collapse. And whether they succeed or not is the biggest, in my opinion, story for the next year or two, or even 3. If they would manage to deflate or slowly slow down their debt-based economy, not to trigger the collapse of that debt, because it's one of the most difficult things to do.
Well, clearly, though, I think with Alibaba, it's Jack Ma company, and he's sort of, or at least in the Western press, it is said that he has fallen out of favor with the Chinese leadership. But we really have no idea. I mean, it's hard to believe like 90% of what you read because it's coming out of China. Because how do you know that's not just some story they got fed? Like like what the origin of COVID started in a wet market from pangolins or whatever. I mean, that's the news out of China, and people falling dead in the street from COVID.
Right.
And the videos, right? And
Yeah.
I mean, that's the sort of propaganda that comes out of China all the time. And so it's hard to believe. I mean, even though it might have been in The Economist or Wall Street Journal or whatever, it's hard to believe a story about Chinese politics that's like kind of puts things in this nice, neat story. Like Jack Ma is out of favor. Well, what do you mean? They probably want something from him, and he gives it to them, and then he's back in favor. They love him again or whatever. And it's like they're using the propaganda in order to pressure him to do whatever they want.
Right.
They want to put a security force in Alibaba headquarters so they can monitor Chinese population more than they're already letting them or something. You just never know what it is they want.
Right. I agree. But speaking of China, we have to mention that whole rumor that came in for the 20th time that China has banned cryptocurrency